Hello everyone and welcome back to my channel. In this video, I'm going to explain to you what do I do myself to maximize the return of my portfolio. Okay, I'm going to show to you a very simple strategy that I had talked about this strategy in this channel before, but now I'm going to emphasize a little bit more because it is very powerful when it's done with the proper risk and trade management. So as you can see here in this portfolio, which it is roughly right now, roughly $35,000, we are up $10,000 in this portfolio. And if you come here to our, I think neck linked here, so the market itself for the past 312 days, we're not even like 1 year yet, we are up roughly almost 15%. The market is up for 15% since this day here, and we are up roughly 38%. So we are outperforming the market by large, okay? We are almost 38% when the market it is roughly 15%. Why? There's nothing special about myself. There's nothing special about our community. The goal here it is the CA on those products that we do believe and you want to hold for the long term, and of course also very powerful using our options strategy. As you know, just a little quick rundown what we do in this channel. We trade options and on futures and stocks, and of course our main goal here it is our long-term investment challenge. Our goal it is to get this portfolio here, which is growing really fast, to $50,000 per year. So far so good. We are roughly 4.2k. We still have here a little bit to go, and what I mean we are 4.2k, it doesn't mean we have received 4.2k. What I mean by now is if we keep this pace here as we are right now, we are going to end the year at this value, but this is only it's gonna grow. The only reason why now July we collect, and we might collect less than June, because June of course it is the first ever month of this year. We had the full house with the portfolio pretty much full invest, but in July we closed EWZ one more, and I'm going to close 2 more ETFs, okay, because we want to shrink the portfolio as much as we want to keep an eye or keep our portfolio on those 3 ETFs, which it is growth and income, and of course value as well with our SEC HG. But if I go back here to our dividend journal, so this month we collect $520, which is not bad. Okay, I think, let me double check here, 520, okay, this is not bad at all. This is actually really good, okay? And if we go back down here on our table, so basically we have actually only three that hasn't paid yet. So as you can see, let me change this thing here. I don't know why it's been changed, but we have these 3 here that hasn't paid yet. And the 3 ETFs that hasn't paid yet, it is the cornerstones CRF and CLM, which I might close that because I'm using TastyTrade or TastyWorks to buy these things here, and they do not do the drip on the NAV. That's the problem with TastyWorks, and I hope they can fix that, okay? So they can drip all the dividends into the net asset value and not market price. Otherwise, guys, just do not sign up for the drip. That's no point. If your broker, whatever broker you might use in this world, doesn't matter if you E-Trade, think of Swim or Schwab or Robinhood or TastyTrade, whatever. If you do the drip, especially CRF and CLM, if you do not drop or drip, at the NAV, forget about that. That ain't gonna work. When it comes to the other ones here, which drip at the market value, that's okay because it is what it is. But CRF and CLM, it has to drip at the NAV, okay? And of course, our SCVOL, we hasn't collect dividend yet. We collect here from JEP, JEPQ, MIST, Baito, what else? And Tesla, okay? So we still have here 3 to go, but August it's not full house either, but September we will have a full house as well, and this is the main reason we collect so much money in dividends on the month of June. And as you guys can see this chart here, we are compounding really well, as you can see, okay? This thing is growing very fast. Of course, we trim here a little bit because we want to reinvest on other ETFs, especially JEPQ that pay per month, but this chart here is going to pretty much compound over time like that, okay? With a massive exponential growth. That's the power of compound. And one of the things that I always said to you guys is this chart here. Okay, let me show you this chart here, which is very powerful, with this one here. All the stars that you can see, these are all contribution to the portfolio. Not just the dividends and also the option, which I'm going to show in this video, but the contribution, it is very powerful and you must understand how it works. Okay, so this is just a rundown of our portfolio. We're not doing too bad whatsoever. If I go back here to TastyWorks, we are not at 10,000 here because I haven't updated yet, because last night our portfolio dropped, I think, $400 or something like that. So now it's 9.7, but we're still doing very, very well. Take in consideration that this portfolio here, it's only like what, 37K, and we are up here 10K for the year, and we are only halfway through the year. So you guys can see how powerful this is going to be, okay? And just before we start, I just want to explain to you why you should become a member of our LTI trading community. If you are someone that's ready to take full control of your portfolio, stay consistent with your income goals, and grow long-term wealth through long-term investing, dividends, and options, then you need to join our LTI trading community, the ultimate all-in-one package for serious investors and traders. And this is exactly what you get once you join our community. Live portfolio access with full transparency, with real-time alerts on every stock, ETF, and options that I make, exclusive trade alerts, know exactly what I'm buying or selling and why, whether it's a long-term ETF or short-term options play, my LTI A to Z dividend ebook, which you're gonna learn how to build a dividend portfolio from scratch and grow long-term wealth. And of course, one of the best option trading course, which it is my OCA, Option Cash Flow Accelerator, which you're gonna master how to sell options for weekly cash flow using simple proven options strategies. And least but not last, the best of all, my custom dividend tracker. This investment tracker is built for serious dividend investors and traders who want real control over their performance and goal. But this is a limited time bundle offer. When you join today, you receive the LTI A to Z dividend investment ebook, the Option Cash Flow Accelerator, which it is our OCA, the full custom dividend tracker, access to my trades and alerts, portfolio reviews and strategy guidance. And this is everything you need to build income, stay accountable, and grow your portfolio with purpose and precision. This bundle is only available for a short term. Don't wait. Take control of your investment journey today. Click the first link in the description and become a member now of our LTI trading community. And let's build long-term wealth together. And back here to the spreadsheet. So what I want to explain to you guys, it is a strategy which is called Cash Secure Put. Very, very, very good for you to use combined with the long-term investing. Why? Because I'm gonna give you guys an example what I did here with Mist. Okay, I do hold Mist. So Mist, let's go here that I can show you guys what I'm talking about. So Mist at one point was trading at this level here, which was 21.68. What I did was I sold an option at the money. Okay, what I mean at the money is, okay, it's very simple. So let's say let's use Mist here. Why now? The stock is trading at 21.68. If you sell a put at the money, you're gonna sell at 21.68. Of course, you might not find this number here on your option chain, but you'll probably find 21.5 near the money or at the money, okay, whatever you want to call it. Some people call NATM, near the money, or at the money. You can take this as in the money, or you can sell down here out of the money. Talk about here selling a cash secure put. If you're selling a call, you sell above the market price. If you sell a cash secure put, you sell below the current market price. So I sold. If you do sell here out of the money, you're gonna sell at 20. If you sell here in the money, you're gonna sell at 23. So basically at this level here, when it was trading at roughly almost 22, I sold at the money at the $22 strike price. And for this trade, I collect $2.10. In other words, my break even was at 17.9. Why? 17.9 as 22. 22, that's right. So it's 19 19.90. Why? Because 19.9 plus 2.10, it is 22. So the market has to drop all the way to 19.9 for me to start to losing money. But of course, missed recovered a little bit, and all that option decay. Remember that option decay, what happened was I was able to close this trade here for a game, okay? And as you guys can see, this trade was placed here in our Discord group. And by the way, this one here, I forgot to update, but I was talking to everyone in the chat on the live stream, and everyone managed to close the trade as well. But I just updated on the Discord group today, okay? So as you can see, on the very beginning, if you go back to the spreadsheet, so on the spreadsheet, when we open this trade here, let me go back to the stats here so I can show you. Okay, secure put. So when we open this trade, let me just zoom in here. So when we open this trade at missed, our return was $112 annualized. Okay, this taking consideration the days that we open and how many days was our DTE. And the premium that we collect, which was $2.10, and that was trading for 20.74. I sold pretty much near the money or in the money, you can call it, okay? And then we sold 3 contracts here, and we collect 2.10, which is the maximum gain at $630, okay? So at the end, when we close the trade, if I go back to our Discord group here, we managed to close the trade or buyback for 76 cents, and we made 158% return on this trade. Very, very good, okay? And the reason why I showed in the Discord group and not here, because here, as you guys can see, if I put here 0.76, which was how much I closed, it's gonna say to me, close the trade. If I say, for example, I'm gonna pay back $2, for example, it's gonna say no. Why? Because it's no good to close this trade in terms of annualized rate of return. That's what this table is here for those of you that are asking me the last video, okay? So if I go back here and put 0.76, it's gonna take all the expiration in consideration. It's gonna take the DIT, which it is this thing here, days in the trade, into consideration, and it's gonna tell me if I should close the trade or not. In this case here, 0.6, of course, I can close the trade. And this is what the outcome is telling me. And that's what I did. I went and I closed the trade. As you guys can see, the print here of the trade close from TastyWorks. And this premium here, this premium that I'm showing to you, this is what's going to make a massive difference at the end of the day in our portfolio, okay? So this is a small challenge, it's a small portfolio. I got a much larger thing of this in our RB. As you guys can see here, last year, I don't know if I can show here, here we go. Last year we made almost $500,000 in one of our portfolio with TastyWorks, and another smaller one we made almost $30,000 with also TastyWorks. But in this small portfolio, I only opened here so far 9 trades as a cash secure put. On the first one we collect $16, $25, $26, then we collect $220, another $220, $100, $69, $50, and now we collect $402. How? Because remember, we sold here for $2.10. Okay, that's how much premium you collect to open this trade. We close here for 0.76. Okay, and then we multiply this by the number of contract, which was 3, multiplied by 100, which it is the option multiplier, and this is equals to $402. This is how much we got at the end. So basically we capture here a lot of the premium, okay? And if I go down here now I cannot actually update here. So that trade was closed on 15th of July 2025, and in our spreadsheet here, as you can see, there was a trade that we did pretty much in the money. It's closed, no management need, no management for the strike price, and no management for the number of contract, and no rolling whatsoever. And we were on that trade 14 days. So basically this trade here, remember, we don't do day trading. Everything here is taking consideration long-term investing. So in this case here, as you guys can see, we were in this trade for only 14 days. Do you want to make $400, okay, ever 14 days? I won. Thank you very much. And by the way, you can scale this as much as you want. This is a small portfolio. If you have here an account size of $1 million, you can X this 400 here, 10x. So this will be your $4,000 very easy, okay? And as you guys can see here at the end, what we're gonna do is we are going to buy SCHD with this $402 that we made in 14 days. How many shares we're gonna get? Roughly 15 shares of SCHD. So what we do is, it's a massive cycle, okay? Right? We trade our cash secure put. We collect here some premium. The premium, we buy some shares. The shares, we collect dividends. Dividends, our account balance goes up, and we give us more buying power to trade more options. You guys can see it's a cycle that never ends. It is the best wheel machine ever. And I'm not even talking about here the wheel strategy. I'm just talking about the combination of cash secure put and high yield paying dividends. Okay, so as you guys can see here, just a little table here in 2024 on this small portfolio, $6-7, and so far this year almost $1,000 in this portfolio, only trading options on a very small portfolio. Okay, and our dashboard, these games here of $10,000 doesn't even take consideration this premium that we did receive when it comes to trade options. So just cutting the story short, very simple. What you're gonna do is you're going to look for those assets that you wanna hold for the long term. What you're gonna do is you're going to sell here out of the money or maybe at the money. The reason why I sold here at the money, because if MIST goes up like it did, I can keep the premium. But if it goes down, let's say $2, I still paying here for MIST $20 on a stock that was almost 22. So you guys can have an idea. I want to hold MIST no matter what. I want to keep building my portfolio with MIST shares for me to collect dividends and use the dividends to buy more shares. Okay, so the first thing you do is you pick whatever security might be. In this case here, MIST, but it can be SCHD, JPQ, Apple, Microsoft, Google, Bank of America, JP Morgan, Nvidia, Tesla, whatever product might be. But you must to have a long-term investment in mind, because this ain't gonna work. Why? Because eventually the market will pull back 20-30%, and you must to have those products that's going to recover. This is a very small part of my portfolio. Why? Because the return when it comes to MIST in terms of dividends, it is a little bit unrealistic. Okay, that's why the position here, it is very small. But with the drip, doing the drip here every single month into this, in the end, we are going to come up ahead. Then you can pick your delta here. In this case, the money, it is roughly 50. If you go out of the money, your delta is going to be roughly 16. You're going to collect some premium, and the premium you can do whatever you want with this. Okay, my DTE goes between 30 to 60 DTEs. This is days to expiration. Position size, when it comes to products like this, very volatile, is roughly 1 to 3% of the portfolio. But if you talk about here, let's say SCHD, I do not mind to open a trade when it comes to option with something like 5 to 7%. Why? Because the worst case scenario, I'm going to hold that for the long term anyway. I'm talking about here SCHD, SCHG, and JPQ, things like that. So you can increase your portfolio size. Of course, I'm not a financial advisor. I'm just showing you guys what I do myself, okay? And this is why this portfolio here is growing really fast, and we are going to reach our goal, which it is to get this portfolio up to $50,000 per year in dividends very soon. Mark my words. And if you guys wanted to follow whatever we're doing, just keep an eye on our channel, subscribe to the channel, leave your comments, interact, and I'll be much appreciated. Okay, so the goal here, it is to sell cash secure put options on those products. In my case, I do ETFs that I want to hold in my portfolio, because the worst case scenario is if it drops below your strike price, you just hold and collect dividends, or you can do your DCAs. If it goes up, guess what? You collect premium. Thank you very much. Rinse and repeat. If you have any question whatsoever, leave your comments below and I'll get back to you as soon as possible. Okay, but the strategy, it is very simple, and this is how we are getting a very small portfolio of $10,000 all the way to roughly 1 mil. And once we get to 1 mil, guess what? We're gonna turn this thing here, which it is $50,000 per year, into $50,000 per month. How long is gonna take to do that? It doesn't matter. It can take 1 year, 2 years, 3 years, 4 years, 5 years, 10 years. But once we keep collecting every single day, every single month, and once we keep buying like we are pretty much every single day, as you guys can see, we're gonna still make money no matter what. We buy every single day, every single month. Why? Because the goal is not to guess any price direction, but rather be in the market and not time the market. Okay, this is the portfolio so far. Like I said to you guys many times, this portfolio eventually is gonna be pretty much like this, with SCHD, SCHG, and JEPQ. Eventually, this is what the portfolio is going to end up. These are just to collect dividends for now, but this all gonna go eventually, and you're gonna end up just with these three here in our portfolio. Okay, thank you very much. I hope you guys are having a lovely weekend. Don't forget, subscribe to the channel, leave your comments behind, and I'll be very happy to answer all of you as soon as can. Okay, guys, all the best. Look after your money, stay safe, and happy investing.